Hello, investors and traders, and welcome to this midweek report live coming to you on this Wednesday, July 9th. Welcome, welcome. With me, I have Nod from NODLive. We're going to get into some of the news feed here in a moment. We are looking at a market that I can see basically is a hung market right now, hanging on every bit of news that comes out of Washington, it seems like. And being that it's July 9th, this is the day that a lot of people were waiting for with regard to the tariffs to see how those were going to roll out. Nod, what do you have this week with regard to news and economic data that could possibly affect the markets moving forward into Friday? What do you got?
AJ, good afternoon. There is no shortage. Listen, I hope you had a great birthday yesterday. I know you don't want to talk about it, but we got to celebrate another trip around the sun. I'm loving this new format of the weekly market, the midweek market report live. The biggest thing that sticks out to me, from today was, Amazon Prime sales dropped 41% on the first day of the 4-day event, showing that there is definitely a weaker consumer spending demand and there's a reduced promotional impact. So no matter what they're offering, people just aren't biting. So I'm really interested to see how that goes. I'm not sure, what kind of spillover we're going to see, and we have a few more days, but I do think that was pretty telling on the first time. And before we get into this week, last week, AJ, we did talk about the ADP number, which came out just before we went live last week, which showed a loss of 33,000 jobs in the private sector. Now, this holiday shortened week with the government, on Thursday, that showed a gain of 147,000 jobs. So that's a bit of a delta between the two of them, but it just goes to further show that some of the data can be quite noisy, and another reason why we have to pay attention to the technicals. So again, with last year saying that they might have overstated jobs by 900,000, that's pretty telling, that's pretty damning, and it's just really tough to gauge these things, which again says why we need to stick to the charts. I know you agree with me there.
Well, it's not just the jobs report, but the unemployment numbers that come out are definitely a factor, especially when it comes to defining what a recession actually is. Who knows what that is? They keep changing the definition. But historically, when we see two back-to-back quarters in a dropping GDP combined with increase in unemployment, it generally signals that we're in a recession. The markets don't seem to care about any of those numbers. We tested the lows today with negative numbers throughout the day, and then if you could see here I'm looking at DIA on my chart. You could see that we had an about face towards the end of the day. Here's an intraday chart that we're looking at here. You can see what I'm talking about. We came all the way down to the lows right around 11:15, and then we stayed in this steady rally. It's not a massive rally, but we just saw the buyers just creeping back into the market. And so it's going to be interesting. I still see the highs up here being resistance, and we're going to have to get through those highs on higher volume to really determine whether or not we're going to be able to sustain the higher levels. But for the short term, I think we could easily see a pullback to this moving average, which would be a role reversal support level down here. We'll talk a little bit more about that when we get into analyzing some of the individual stocks, particularly Amazon, as you mentioned. Well, what else do you have on your list right there of tickers to talk about? I know we were looking at natural gas as well. What do you have there?
Yeah, we were. I mean, now AJ, I can skip ahead here. You love keeping me on my toes, so let's go here. So natural gas. I mean, with everything that's going on in the world, with with people looking at recessionary bits, people looking at data from earnings, people looking to pull forward in currencies. Natural gas. It's quietly it's at its low since November. Now we know that the U.S. has a dearth of it, but our members have had success in trading the futures and trading UNG. Is there something you see within UNG or in natural gas alone that gives people an opportunity here?
Well, I like UNG in particular for the equity traders because it's not a high price stock. It's one that the average investor / trader can get into. But if you look at what happened today, UNG gap down on pretty high volume. And that's the tell that the sellers came in, yes, but when you see the big spike in volume on a gap down, that also indicates that there's sell stops being triggered below this support level. I don't know if you could see with my cursor right here, but that low right there is 1460.
Right.
So when we open below that level, the stop orders are triggered, and a lot of the traders know where those stops are. So a lot of times you'll see them running the stops. Well, that's a short-term opportunity that they create for themselves. That's really the opposite of a short squeeze. People put in buy stops when they're short the stock, or they'll put in sell stops when they're long to give them some downside protection. But when they run the stops, you'll generally see it continue in that direction for a few days before you get the bounce. So I like UNG here. I like natural gas. If you're a futures trader, that's /NG. But I also like the fact that we're approaching this support level back here from December. I'll just draw that out for you. You see, we're not that far away from it. So if we get further drop to this support level right here, which is going to be right around the 1360, 1364 level, I think you could see a drop in volume. Keep an eye on that. That's going to be your signal that the sellers are starting to slow down. Remember, if you've followed my weekly market reports or any of the webinars that Nod and I do, I always talk about volume as a leading indicator. It's not a lagging indicator. It's a leading indicator. So when the volume drops here, what is that telling us? It's telling us that the sellers are slowing, and then that will most likely attract buyers. So around that area, right around 1360, 1370, I think you could see a pivot, at which time that would be, if I was trading it, I have to say it this way, if I was trading it, I'd be buying on the pivot. But not only would I be buying on the pivot, I'd also be looking as an option trader, I'd be looking to go out there. Look at my option screen here. You can see now these are going out to January 2026 right here. I'd be looking to buy like the $17 calls right around the 170 to 180, maybe up to 190 level, and then popping that out once we get to this moving average. And that moving average is up there around $16. So you got gaps above the market. You've got this wide divergence here from that moving average. And once we get the pivot, you're going to see the CCI down here start to move up. And once it crosses over the -100 mark, which, by the way, is the buy signal, if it crosses up above that green line, which represents the -100, then you're going to see new buyers coming in just on that signal alone, because the CCI has a pretty big audience, and I love it. It's my absolute favorite indicator. Nod, you know that. We talk about that
Yes.
every Wednesday for sure. Yeah.
Well, that's great. I appreciate that. And listen, speaking of indicators, and you've kind of put yourself on an island. You've talked about silver for a long time. Long before the tech run, the chip run, and before it kind of almost became cliche. And at times, you kind of put yourself into a corner because a lot of people didn't follow it. It wasn't liquid. People didn't know what to do with it. Well, it sure is front and center with everything we've seen with all the billboard names and that. But what's interesting, and especially with folks using it as a store of value, we like to look at the gold silver ratio, and I've got a chart of this up now because if you look at this, AJ, the way that the gold silver ratio is trending, this tends to bleed favorable for silver because the value of gold against silver is dropping. Can you talk to us about what you've personally been doing with your silver position? Because I know at times you like to dial back, but it seems like as of late you've been buying on this dip. And then what are some things you see that our members can do in some of the other liquid instruments?
Well, Nod, if you could, will remind me to put the link to the most recent article that we published through ZeroHedge, which
Sure, I'll
talks
grab that.
about silver. And we'll put that in the description link for the folks that are watching the recording, especially. Now, you have to understand something. I started trading the markets right here back in 1982. Let me just draw a little vertical line here. All right. Then silver rallied up. Now, this time when I stepped on the trading floor was actually August 15th, 1982. So I'm coming up on my anniversary here next month. And right before I stepped on the trading floor, this happened. That was the Hunt brothers coming in from Texas, taking their father's money and buying up silver, not to intentionally corner the market like many people want you to believe, but that was the story that the board of members on COMEX came up with, because they had to come up with a good excuse to close the markets and restrict any new buying. And that's exactly what happened. The board of directors came in and said, okay, the Hunt brothers are trying to corner the market, so we have to stop trading. And you could only enter liquidating positions. So you could only put sell orders in. The very next morning, we had limit down. And for the next few months, the silver market basically collapsed in on itself. And the Hunt brothers walked away with a big black eye. Now, let's go back to this point right here. That's 1987. Now, I had my biggest hit in my entire career of over 40 years came when I got long silver right there, because I thought they were going to make another move to go higher. That was not the case, obviously. In fact, the opposite occurred when they put more pressure on silver and kept it down for almost 10 years at that point, and then it started to stabilize. Now, where am I going with this is I believe that what we're seeing here is the Mac Daddy of cup and handles right here. All right. So this is the handle that we're forming right now. And a lot of our members already know this, but I like trading the completion of the handle, which means I do believe that we're going to go right back up to $50, which is not such a bad percentage move when you look at silver right now and the futures trading 36.5. That's a nice percentage move up to that resistance. However, once we get up to that level, I know I'm more or less talking in confidence that this has already happened, but I do believe it will happen. Once we get up to 50, I think they're going to try to put a lid on it at that point, but I don't think they're going to succeed, because at that level, the short squeeze is already on, and I think we could break out over 50. So when I talk about silver going to $100, I think I'm being conservative when I say that. And so looking at SLV, which I like to trade, and to give you a little bit more insight, I accumulate physical silver, but I trade in and out of SLV. And then along the way, when I take profits out of SLV, I'll convert those dollars into more of the physical asset. And I have almost everyone in my family buying silver, including my kids. And I will tell you that my grandkids are going to wind up inheriting a lot of that as well. But look what I'm talking about here with SLV. This is the monthly chart. And when you talk about the gold-silver ratio, you have to watch that, because it's a double-edged sword. When the gold-silver ratio is high, like it is right around 90-1, that means either silver is too cheap when compared to the price of gold, or gold is too expensive when compared to the price of silver.
Right.
Where does that go? Well, the investors tend to buy the cheaper of the two, which for the longer term, it means silver is going to be more on the buy side. And I do think we could see a little bit of a pullback in silver here, but I'm a buyer on the dips. So if silver does pull back anywhere near this gap down here, this area, I'm a buyer, and there's another gap down here that's still open. I would be a buyer right in this area, and I'll continue to buy until we get a new high, and then I'll even think about selling some of the position. But I parlay that. I get in, I get out, I make the position bigger each and every time, and I'm having a great time with that. Now, I don't know how many of our viewers are in and out of SLV, but we'd love to hear from you. If you have the ability to put in what your intentions are in the chat right there, we'd love to have you. I see Rob in India is out there. He says he loves the report. Thank you, Rob. We got Nico in there having a happy birthday wish. Thank you for that nod. My cell phone is already being pinged here with happy birthday wishes. Thank you very much.
There you go. Well, I'm glad your cell phone's out there late as much as mine is, Mercy.
we'll talk about that later. But yeah, now so we're looking at silver right now as a possible pullback in this area here. And I like to play it from the long side. And I don't know how our members are playing it, but if you're interested in knowing what I'm doing with SLV, just go to my X page and type in hashtag AJ SLV
SLV.
trades. Yeah,
Correct.
Not will probably put that down there as well.
Yeah, I mean, again, I know we're not going to give advice, but what level is AJ Monte looking at to add? You talked about a pullback area. I mean, I'm not trying to pin you down, but what area will get you excited where you want to add to your existing position, AJ,
Well,
on SLV?
yeah, it's going to be basically the gap fill areas. Let me do it this way. I'll even put some shaded areas in here. I don't use this often, but I'm gonna put this little box here. You see, so there's level number one, and if it drops down even further than that, then this area down here, which these charcoal areas that I've just put in the form of a long rectangle, are the areas where the gap is still open. So that whole area between these shaded areas are where I'm interested in buying more silver. Now, again, if you get a chance to read the ZeroHedge article, you have to understand that the consumption of silver, with regard to it being an industrial metal, far surpasses the production levels. And so as long as that continues to be the case, you're always going to have more demand than supply. I mean, that's
Right.
just basic economics 101. So the miners, especially if you look at the miners like AG, I love First Majestic. That's one that you want to keep an eye on, because this is, again, a fairly inexpensive stock that you can trade in and out of. This one looks a little bit different than SLV because it's got a flag pattern forming here. And if you take a step back and look at this one on a monthly chart, it still looks relatively low compared to some of the other charts that you're looking at. You see, so this whole area here that I'm highlighting with my little cursor, that's more of a rounding bottom. And John Murphy, who years ago was the technical analyst for CNBC, he was the chief technical analyst, he would always talk about that as a rounding bottom or a saucer bottom. And he would say the longer the base, the higher in space. And I would absolutely have to agree with that, because if you look at AG, where is the major resistance area here? It's up there around $23 to $25. Remember, it's trading 8.5 right now. So when you're getting into something like this, I'm not saying don't play and just go long and don't protect yourself. You still have to use good risk management with that. But this one looks like a really nice accumulator. And for the option traders out there, with this one being around 8.5, you could use the premium that you collect from other option trades to go ahead and use that to help pay for AG. You could also look at Pan American Silver, which is one that I mentioned in the article itself. You know, it's got a nice cycle to it. This is also a really big cup here with a handle forming with the top of the cup, or the brim of the cup being up there around $40. So this one has got another 30 to 35% to the upside if it goes in and it tests the upside of that cup and handle. So you got another fairly inexpensive silver play here that's not going to tie up a lot of your buying power. But yeah, we could talk about silver all day long. But it's a contract that I am most familiar with, because it was the very first trade that I made when I was a young trader, and I continue to trade it. So you're talking, 43 years now that I've been trading silver, and second to that would be gold. So between gold and silver as a trader, those are the two contracts that I'm most familiar with. I'm very excited about them.
Well, I mean, speaking of gold, AJ, I'd like to pull up a statistic on my screen. I'm going to do this one. I'm going to share this screen really quick, because yesterday we had some really wild news with regards to an increase in our debt. So Anthony, I'm going to pull up my screen if you wouldn't mind, and I'll share this. So if you can make sure that we can see this. So AJ, I can't believe, Anthony, if you can change the screen, please. There we
There we go.
go.
We got it.
Oh, try this one more time here. Sorry, guys, live TV.
Yeah. So you're pulling up the which chart are you pulling up?
All right. So yesterday alone, folks, thanks. Yesterday alone, our national debt went up $366 billion, and that's according to the Joint Economic Committee. That's not me picking off of any left side, right side. That's just the stats we get from Washington. So this was reported from Congress's decision to raise the federal debt ceiling to $41.1 trillion. So this increase is considered the largest single day that we've ever had. So AJ, with all this uncertain times, aggressive spending is necessary at times, but it does bring me back to gold. So when you brought up gold in it being an instrument you like to trade, don't you think this puts kind of a synthetic floor in under gold? And if you can just talk a little bit about this, and while I'll do that, I can.
Yeah, you got to be careful with gold because
these are gold traders.
Yeah, I don't want to create a false sense of security in gold, where people go out there and just start buying gold. Because if you look at, yeah, the gold right there. If you look at my chart on GLD, this is going back to the monthly charts here, going to 2004. Remember I said about the gold silver ratio. If it's 90-1, it's either gold is too high and it's going to come back towards silver, or silver's too cheap and it's going to start coming up to gold. Now, I do think that there's been more pressure on silver as a commodity than gold, but you have to look at what's happening in China. China continues to accumulate the physical metal, gold, and I think that they are hedging themselves against what could be a possible collapse in the fiat currencies across the globe. Now, looking at gold on this this monthly chart, it's more overbought than silver, and it's already reached the point of the cup and handle target. Here's what the cup and handle target. I'm gonna draw the brim of the cup right there. So when you're measuring a cup and handle formation, you take the depth of the cup, okay, which I'm doing here, and you attach that to the breakout point, and that's going to give you your target. Now my upside target on gold of around 3,000 has already been reached, and now it's a little bit overextended by maybe 10% over my target. So I do think gold could start to come back and pull back. I'm not saying all the way to the moving average, but I think you could see some profit taking in gold. The other thing you have to look out for, and this is all related, obviously, is when you're looking at the dollar, which I'm using $DXY. Look at the dollar now in this monthly chart. You have the dollar now starting to pivot off of the trend line within this channel. So you throw that in there with, the possible talk of lower interest rates, man, that throws a wrench in the cog if we don't have one already. Because if they lower rates, what is that going to do to the dollar? It's going to collapse the dollar. And so we could see a continued breakout to the downside in dollar, which then, and so all how it all connects and putting the dots together, is that it could attract more buyers of gold as they move out of the dollar to hedge themselves, because a falling dollar is very inflationary. And historically, the hedge against inflation would be the commodity markets, not just gold and silver, but you could throw copper in there. You could even throw some of the agricultural commodities in there, like, corn and wheat and some of the other ones. They tend to go up. And so again, this is a trader's market. It's going to be pretty stressful, I believe, for the buy and hold investors, but for the traders, we're having a field day, an absolute field day. We'll get into how to trade the dollar maybe next week, and we'll try to bring some of our experts on to talk about the dollar in the next session.
Yeah, now AJ, so in about an hour and a half, you and I were going to go do something called rapid fire with our members, where we sit and we field and forecast 50 plus tickers live for over 200 people that come in, and I want to make sure that people know here that we look at the charts. I mean, you don't have a bias either way with regards to the equities. You might have a macro view, but can you explain to people about some of the blended looks? Yes, on the long-term macro side, you do have a bearish idea, but with regards to a lot of our recent publications, there've been a tremendous bullish bias. Can you kind of lean into that?
Well, actually, 100% of the equity trades that we put out so far this year have been on the buy side or the bullish side. And with regard to the options that we trade for the directional option traders, it's mixed. And even for the spread traders, I would say it's a balance between positive and negative delta, but we're slightly positive in the overall positions. Now, this really messes with some of the trolls out there because you say we're going a lot lower. Yeah, long term, I think this market is at risk of collapsing in a big way that could make 2000 and the crash of 2008 look like kindergarten in comparison. That's what I believe long term. But you cannot deny that every time we see a sell-off, the buyers come in, particularly the institutions, and they buy it up. Well, what else are they going to do? This is still the best market in the world. They got to park it somewhere, and they can't put it in the dollar, right? We just saw that.
Yeah.
They can't really put it too much into gold because gold is overbought at this particular point in time. So they tend to park their money in some of the mega cap stocks like Meta, Microsoft. You got, some others that are out there. Eli Lilly is a position that we have that we're doing extremely well in. But long term, I'm absolutely mega bearish. Short term, we play the swings. That's what we do as swing traders, and we're option swing traders, and we're doing pretty well with that. Now, with regard to the rapid fire tonight, again, as Nod said, from 6 to 7, we go through 50 stocks in 60 minutes. Now, last week, we went over 50 stocks, and I'll make this announcement again during the live webinar, but 36% of the price targets that we set last Wednesday have already hit, which is far above average. Normally, we get about 20 to 25% of the targets hit, and we're 10% over that number. So I'm really excited because a lot of these stocks are following the technical signals like a charm. And if you stay tuned to our webinars and these broadcasts that we do Wednesdays and Fridays, and you could even throw in the technical Tuesday, you're going to learn how to read the charts so that you could build some confidence in your own ability to trade these markets.
No, it's great.
Yeah.
That's great. So we're content rich. I mean, Mondays we do a super spreads call where we talk about spread trading. Tuesday is our small group where we have our power pivots group and our VIP group. Wednesday we have rapid fire and we have this live midweek. Thursday we have an equity analysis. And so there's something for everybody. And we're trying to make sure that we cover all the bases, whether you're brand new to trading or whether you're incredibly seasoned. There's always something to learn. And speaking of AJ, while we wind this out, we have something from Ben Wyatt. I wanted to see what you could say. He says, why does AJ sometimes sell out of the money credit spreads and sometimes does in the money credit spreads? Is that just based on potential returns?
Well, it's not just potential returns. It's based on how much risk I want to take and what the charts are telling me. So, for instance, for the option traders, vertical spreads are what we do most of the time on Tuesdays with our VIPs. And there were a couple of trades that I'm not going to mention the stocks, but I can mention the trades that we closed out of today, especially. Let me see if I can find this one. This was a big one. We closed out of the VRTX. Now that was an in the money credit put spread that we sold on July 1st. Today we closed that down for a 72% profit. Now that's for the VIPs because they pay a lot more money to get these extra trade notifications. And CVX, which we just put on yesterday, was closed out today for a 4.4% profit because CVX, although that was a credit put spread, it started to show some signs of bearishness there. So it's a mix and match. It's what are the charts telling me and how much risk do I want to take? Real quick, before we wrap it up, an in the money credit spread, whether it be calls or puts, actually carries less risk and more return potential than an out of the money. So a lot of times we're going with the in the monies. Nod, we are right at the bottom of the hour.
That's
And
right.
boy, did that 30 minutes fly by. Folks, we want to thank you so much for joining us. Please remember to put it on your calendar to follow us next Wednesday when we go live. And make sure you hit that notification bell, which is, where is that, on the top right there of your screen, because then you'll be notified when we go live and you won't miss the very beginning of the program. So once again, thank you so much. Keep your stops in place. Keep your eyes on the charts. And we'll talk to you next week. Thanks, Nod.
See you in rapid fire.